Hello, everyone, and welcome to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and their professional teams struggle to find great capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the Deferred Sales Trust is the best way to exit your highly appreciated assets tax deferred so you can create, preserve, and grow more wealth. I'm your co-host, Pearson York, filling in for Brett Swarts. In each episode, I'm joined by some of the best wealth, business, real estate, and leadership individuals in the world to share ideas, deal stories, inspiration, so together we can make complex tax deferral strategies simple and passive income plans achievable. We're also streaming on expertcresecrets.com and Capital Gains Tax Solutions YouTube channel. And I'm real excited about our next guest because he's been in the real estate world since 1996 and in the loan world since 2001. He's got a wealth of knowledge and experience. Their new trademark company, the Burr Loans, BRRR Loans. And so everyone, please welcome Joel Kraut. Joel, how you doing, my friend?
Thank you very much for having us on tonight. We appreciate the opportunity to be here and speak with everybody. It's great.
Yeah, thanks. Absolutely. So, Joel, how'd you get started in real estate in your loan? How'd you get here?
So I started out, I was a trader on Wall Street for about 22 years, and I used to commute for a while. And while I was commuting, I would read books. And I read a lot of, the really boring autobiographical nonfiction type stuff on most of the people that were in the news a lot. And one of the underlying themes is all their families owned real estate and they were all wealthy. Yeah. So I didn't come from that kind of background. My dad worked for me. And, that opportunity to start moving out of Wall Street and into real estate, trying to be like Mike, right? I kept reading about all these people and famous families, and I wanted to be like them. So we started to actually buy real estate. In 1996, I made my first personal purchase of an investment property. And on interest rate wise, I've been telling everybody lately, I paid 8 7/8 to Countrywide, and now Bank of America. So the key was the math worked, and that was really what I was focused on. I wasn't focused on the interest rate as much. And the tax laws were still beneficial. They're actually just about the same today. So you're still, benefiting on all the commercial tax laws, whether you're buying a single family house or a hotel building. So it was great. And we kept growing from there. And then in the early 2000s, I actually started to flip houses. Before that was on HGTV and, all these different real estate investment clubs around the country. I would buy a house, repair it, and then sell it for a profit. And I literally would go to dinner with my ex-wife and another couple, and the couple, invariably the men start talking at the table. And the guy said, I heard you do this real estate thing, but I don't think I really understand it. Like, my wife told me you buy multiple houses. Like, why would you want to own multiple houses? Like, you can't live in them all. Remember, that was a very foreign concept back then. Yeah. Back then being 20 years ago. No one really even believed me when I told them I could buy one at a discount. You'd have to give them an example of how a discount could come available. And then you could see them starting to put it together, and wow, maybe. And some of them started to actually lend/invest money with me, so I could do more at the same time. In the beginning, I just used my own money, and then as we kept growing, I mentioned to you earlier, we were doing multiple on the same street, and I had to bring in some other money, to be honest, to keep up with the jobs. To this date, I'm fortunate enough to have flipped over 100 houses and have built 185 single family mansions and 60 townhomes, et cetera. So we have a lot of real estate experience, and that really parlayed itself well from the Wall Street background in math, the real estate combo, and then being a real estate lender. It's just sort of all dovetailed together. So I've been very fortunate to be able to use those strengths and bring it together under this company. My son and my family is also here with us in the company, and they really have helped take it to a very different level. Without them, I would definitely be back in the Stone Ages still.
Yeah, absolutely. So flipping homes in 96 before Flippy Flop made it famous, right? Yes. Awesome. So what so there's a lot to unpack there that I definitely want to get to. But before that, I believe everyone has a certain set of spiritual gifts or superpowers or strengths. What are one or two of yours that have led you to be successful today?
I think one of the biggest things, and I took one of our guys out to lunch today and I was talking to him, people count, people matter. You have to be able to understand that and not just have empathy, but understand what someone else is going through and how you can help impact that in a positive way. And I think not just, the rah-rah motivational, but giving people a framework to think within that can be positive for them and help carry them through that is really important. Being able to be part of what's going on out there now. The Burr thing is a very powerful thing. I know people always ask us about the loans, but it's really not the loans. Burr is a lifestyle. People are committed. There's people on the event tonight. It's well after work, normal work hours, depending on what time zone you're in. But taking time away from their regular family hours, and they're committing themselves, and they're committing themselves to long-term financial freedom. Nobody wants to sit back and wait on the government.
Right.
People want to be active and proactive, and not dependent upon. Dependent upon is always a position of weakness. And being proactive and taking stock of what's going on around you and taking that opportunity to invest in physical sticks and bricks that people can understand and get their hands around, literally, and being able to use we're talking about taxes in general, the beneficial tax laws in the commercial sector, which really drive what's going on here. And that combination really presents you the opportunity to build financial freedom for yourself and your family and long-term generational wealth for your long-term. I mean, it's a great situation, and being part of that and plugged into that, I think more so than the loans and fighting about the interest rate and the fees, et cetera. I mean, I know we always have to be competitive. Don't misunderstand me. I'm not, naive in that regard, but being more in tune with what people are thinking and their strategies and how they want to learn and implement them. We spend a lot of time talking publicly about that part of it, that aspect. You know, to me, that is more significant than the single best loan. If you're doing that well and learning how to be, quote, an investor versus a spender, then you're protecting yourself and building for the future. And I love to be part of that. To me, that's really cool.
So it sounds like what you're saying is that having the ability to have a long-term viewpoint from from the perspective of okay, I'm gonna invest this into something that I care about to delay the gratification today so I can have what I want in the future. So you really have that long-term mindset that has given you the ability to basically just fulfill the desires that you got for the future and not just the immediate gratification. Is that kind of a good summary?
I would say that's pretty accurate. Being willing to give up some now for medium and long term, not excessive, but significant and larger gains.
Yeah.
Those gains are not just pure numbers. Those gains are also a lot of flexibility in your life, right? Building a life you love.
Right.
I tell my kids all the time, that is really and should be the goal. It shouldn't just be money. If you're doing something that you're passionate about and doing it at a very significant level, that's the greatest thing. The money will find you and follow. All the people tell you can't earn that, you can't do this. They're really telling you what they didn't accomplish, right?
Right.
The Bill Gates of the world never sat down and said, "Oh, I'm going to do all this software stuff and I'm going to make $1 billion." They didn't care about that.
Right.
I'm not saying that everybody's going to be Bill Gates, but if you have that kind of passion in whatever you're doing, you'll be surprised when you look down in 5 years how much you've achieved and the flexibility it gives you.
Yeah,
And then
absolutely.
as you do, achieve that, it gives you other opportunities. You can give back. There's things I'm sure people, are either sentimental about, things that have happened in their family. They want to impact as well in a positive way, and they can. They'll have some flexibility. And they can participate in that in a really positive way, and it just kind of brings it all together for you.
Absolutely. So having the passion, right, and then and the love for doing what you're doing, and then the long term view, or the long term mindset is really kind of the strengths that um, you've got that kind of let you be here. So all that being said, how'd you go from real estate to loans?
Well, the truth is, at some point, you see what the money is to be made on the loan side as well. And contrary to popular belief, over the last 6, 7 years, real estate cannot appreciate at 20% per year forever. But you can lend money And in lending the money, you can participate in a lot of that without physically having to own it and the work and responsibilities of that ownership. So being able to move money and the leverage of money gives you an interesting and great opportunity financially. We had people come to us literally and just ask if we could help them fund their projects in the beginning. And it was very simple. There was very little competition. We would lend the money at 14% interest and 4 points.
Wow.
I know everybody's aghast.
4 points?
Remember, there was very little competition and the spreads on the deals were much, much larger. So even though that sounds like very heavy handed, you were making a lot of money and it was reasonable business expense. It was factored into your deal and it worked without a problem. Now, obviously, those numbers are very different, but the game has changed significantly. The game is not what you see on paper. The game is the leverage of the money. That is where the money is made, not necessarily making a loan to you at 9 and 2. I know that sounds pretty good, but that's not really what's happening. That's not the secret sauce.
So let's unpack that. So what is the secret sauce? So you just said the power is in the leverage, right? The money's in the leverage. So unpack that for us.
So especially with interest rates so low, we're in a very unique time. I've never seen so much liquidity in a market. I know everybody tells us we're at the top. I've thought about that myself many times, but I've also, from experience, never seen this kind of liquidity available at a market top. Usually we're leveraged out as a group and we don't have the gunpowder anymore. Here, that's very different. So you have a lot of large institutions, Goldman Sachs of the world, that type size, and larger hedge funds that are desperately seeking yield. And in that, they'll put out money at rates that allow people like myself to make a spread on that money. So that leverage factor gives us the opportunity to bring money to the market at very fair pricing and still make money. That didn't exist when we were all lending our own dough, and it was very different. The markets are so significantly large nowadays, in the billions, and maybe even a trillion, I'm not sure, but certainly in the billions, even in the private space. I'm not talking about anything to do with primary residence ownership. This is all non-owner occupied, all investor driven. The properties that we lend against, for the vast majority, are already cash flowing, and thus we feel have the ability, not perfect, but the ability to help weather storms as they come up. That's very important for us. A lot of the loans are being securitized away into the third market or sold off to insurance companies and not kept on our own personal portfolios. The loans that we're making in the fix and flip world, a lot of those are kept on our own personal portfolios. So there's two different things happening, and it definitely changes the dynamic in terms of our returns.
Yeah, I want to pause you there for a second just so I I understand. So basically what you're saying is because they've printed so much money in the past few years, that the liquidity is so abundant that they're willing to just loan at such cheap rate that you can basically just borrow it, and then now you've got your own list of people that are borrowing for it, and you just basically pocket the delta and put the difference in your pocket. Is that essentially what you're saying?
At a very simplistic layman's terms, yes.
Yeah.
Absolutely. It's not quite as simple
I'm
as
not
that.
a genius. I'm sorry.
No, I don't mean it that way, but it's not quite as simple as that. But on the broad stroke, what you just described, yes, that is correct.
Okay, so there are nuances then to that, right? That allow. So I'm assuming you guys are catching some sort of like wholesale lending, like yourselves, and then you're turning around and you're like, okay, we're going to loan out at an increased, couple points or percentage points on the APR or something like that in order
we're doing both. Yes.
Great. Okay. So are you you're in, that's, the residential world, right? And are you in the commercial world at all as well?
We're really lending to 1 to 4 family type properties.
Okay.
Traditionally considered residential.
Right.
We do lend to 5 to 20 unit properties as well, and some smaller mixed use properties. So we do some commercial properties, or what people, generally think of as commercial properties.
Right.
But the majority of our business, 80+%, is in the meat and potatoes, single family to 4 family type properties.
For sure.
You got to remember 10 years ago in 2010 and 8, a single family property was the piranha of Wall Street. No one wanted it. It was not an investment asset.
Right.
It was not an investment class asset. But then, the JP Morgan Chases of the world, Goldman Sachs on their alternative desks, have created significant funds and bought ungodly sums in numbers
Yeah.
from any kind of tape that might have real estate owned on it and taken down incredible numbers of properties.
Yeah.
And they self fund the interest, in that fund, and they can put it back out as they see fit with big profits. So the business has become very professionalized, very.
Yeah, absolutely. So do you guys own any commercial? Have you guys made a jump over from single family burrs to uh, bigger commercial units, whether it's multifamily or mobile homes or anything like that?
Well, mobile homes are all the rage right now. They're definitely on a big trajectory up. But what we see for ourselves and a lot of our investors, people are trying to sell packages of 10 and 20 single family homes and roll them into one 20 or 40 unit building. People have definitely learned that it's tough to, have 40, 60, 80, horizontal type scenarios, and much simpler to operate, own efficiently operate under ownership one, vertical 40 unit building. And people are definitely migrating in that direction. Also, the syndication market has grown gigantically in the last
Yep.
5 years. People have banded together all over the country. We were at a big event in Denver recently that was totally geared to that. A lot of
BEC.
really, yeah, a lot of really
Yeah.
smart people in that room. That was very impressive just seeing what they're doing. So it's been very cool. One of the great parts about what I do is I constantly am in a position to keep learning, which is great, for me
Yeah,
personally.
absolutely.
I love that.
How are these people who are packaging their 20 to 40 single family homes and are they 1031ing into these bigger properties? How are they kind of like avoiding the tax? Are they paying the capital gains tax, or what's been your experience with that?
I would say the majority of people are 1031ing. Some
And what do you
people, because of the market and the market being difficult to find properties, some people are working towards the reverse 1031. They're
Yeah.
identifying before they sell. The selling part right now, which absolutely will change over time. But obviously, as we all know, that the selling part right now is the easy part. The hard part's finding the targeted purchase.
Yeah, definitely.
And that has caused a lot of problems for a lot of people running right down to the deadline and voiding their 1031. And people are trying to be proactive with that and learning more and understanding the best ways and most efficient ways to be able to move that money. They're afraid. They're truly afraid, which has also caused a little more of a frenzy in the market.
Yeah,
It's
definitely.
helped drive prices up even more.
So what would you say is the biggest frustration then with the capital gains tax deferral and the 1031?
I think right now the biggest frustration people are finding is not understanding where to shop, what to find, who to trust. You know, the simple thing to do is to close your eyes and go buy that Walgreens, 5% five cap somewhere, right? Four and a half cap. But the reality is you're just not really making much money.
Right.
And if anything changes in the market, you're even quickly. You're not really advantaged. And you just sold this huge advantage situation.
Right.
It's uncomfortable for people to put themselves back to a zero advantage situation. So people are trying to figure out the best ways to do that. We had one client work with another client. The client carved out 30% of the building and sold it to them joint tenants in common for their 1031. So it would
Hmm.
qualify. That worked nicely, and the person got a pretty good asset, and they were able to buy in at, let's say, a 7.25 cap on a really nice medical arts building. So there is some creativity going on as people approach sellers or potential sellers and finding alternative routes to be able to bring those deals together. I think that's important. Whomever you're working with, either from the sales side, if you're working with sales agents, your 1031 agents, making sure you understand the rules, making sure they understand what you're looking at. So that exchange of information not just flows correctly, but leaves you in the right position when it's time to close. And you don't have to throw your hands up because you've done something you can't do.
Yeah, absolutely. And that's why what you just kind of said is the the appreciating markets, right? So you have the people that are selling high but have to buy, even higher 180 days later, right? And if it's
Some of them,
compressed cap rates and all that stuff, those time constraints are really just um I don't know, making people, make bad investment decisions sometimes almost, with just the
Yes.
sheer just pressure of like, oh, I got to get this done or I'm going to owe this huge tax bill. Um,
It's
and it's
definitely hanging over people's heads right now. Absolutely true. You
yeah,
combine that with the once in a while chatter out of the government that they might change the law. People don't know when. People don't understand how they can or can't, what kind of time frame they can or can't do something like that in. It adds continuously to the frenzy. They're
yep,
not helping anybody. I don't even know if they want to, but they're definitely not helping the markets in that regard. That kind of lack of communication just frustrates the market, and fear, drives things higher. That's
yep.
just reality. The unknown is scary to people, especially when it's tax disadvantaged.
Right. Yeah, absolutely. And that's why we created the company Capital Gains Tax Solutions, is because I think a lot of people just don't even know their options. Like we said in our intro, we believe that a lot of people struggle with clarifying those options. And one of the best options out there is relatively, unknown, is the Deferred Sales Trust, which is what we focus on. And it allows you to liquidate an asset, and not just real estate, any asset. It could be stocks, it could be business, it could be a primary home, it could be Bitcoin or Ethereum or any crypto or whatever, and liquidate the asset and diversify it into any other investments. And it's a very like kind agnostic uh, investment strategy. You don't have to go. So you could sell real estate and you can go into stocks and bonds and a business, or you could sell a business and go into real estate and stocks, or you could sell crypto and go into, a business and some real estate. Like, it doesn't matter what you go into, and there's no time constraints. So you can actually sit on the
Yeah,
sidelines and wait in super conservative accounts until the market, drops or whatever it does. And then when you find the right deal, it hits you over the head. You can JV partner with your trust and go and you can buy that asset, and you can actually get a new depreciation schedule too on top of it. So there's so many
great.
advantages
Right.
to it. Yeah. And it's just, it's very, customizable. You can change things. It's unlike a charitable remainder trust where you set that thing and it's stone. Like, that thing's
Set in stone.
unamendable and
Absolutely.
you can't do
Right.
anything. Then this provides flexibility, diversification,
I mean, the product that
cash
you're
flow.
talking about, the product you're talking about is an unbelievable find for the market.
Yeah.
When you think about all the business owners out there that for many, many years, let's say the last 5 to 10 in particular, they've heard about this 1031 thing. In their minds, it's set in stone that it's real estate related, and they don't know what else to do. Your group is providing a solution that is in high demand, and as it continually rolls itself out and has become more widely known, will benefit unbelievably. But at the same time, it will benefit the people using it amazingly.
Yeah.
I mean, you're thinking about selling your business and you don't know what to do with the money and how to avoid, not avoid, it's a horrible word, how to defer tax scenarios.
Right.
And your product is giving them an outstanding opportunity to be able to do that legally, financially stably, right? You
Yep.
can wait the market out a bit. You're not forced to act. We spend so much time being afraid all the time. You're giving them a solution that puts them back in a proactive manner, but proactive with time on their side. Now, that's a
Absolutely.
beautiful combination, which isn't found too often. That product, as it becomes more widely known, will be the superstar for the next 10 or 15 years.
Yeah, absolutely. And to your point, just a quick story. We had a gentleman back in, the late '90s and early 2000s, was doing multiple 1031s and ended up with this $20 million dollar apartment complex next to the Minnesota Vikings stadium. And in '06, he's like, I want to
Nice.
sell. I can't, I can't find an up leg for my 1031. I don't like, I don't want to invest in something that I don't, isn't a good deal, but I really want to liquidate and get out. I've pretty much depreciated most of my asset.
Right.
So he ended up doing a deferred sales trust with us. He, deferred about $3 million in tax. He paid off all of his debt. He got into super liquid, very conservative mutual fund ETF type investments, earning about 4.5%. And in 2012, he gets a call from the bank and they're like, hey, that property you sold back in '06. He's like, oh yeah, that one, the 1031 buyer who way overpaid. They're like, yeah, well, we're foreclosing on him. We want to know if you want to buy it back. He's like, well, how much is it? And they're like, about 40% off of what you sold it for. He's like, yeah, sure. Give me 3 days.
Of course.
Ends up partnering with his trust, goes and buys the property back, and he got a brand new depreciation schedule on top of it. Now, that
Yeah.
doesn't happen every day, But the fact that he was set up for success, right? Like, luck is where hard work meets opportunity and preparation, right? Where he was positioned, right, with the ability and the flexibility and the timing to do that, he was able to, kind of make that maneuver happen and call him the Monday morning quarterback because he's like, almost like Tom Brady in the Super Bowl against the Falcons.
I was going to say he's the genius Monday morning quarterback.
Yeah, it played it perfect, right? Like, but that's the power because.
But all kidding aside, that program, I mean, for people who understand what's happening in the market and have just a modicum of patience, just a little, don't have to be the person that has to react and has to jump, who can have a little bit of patience and not have that great cocktail party story immediately.
Right.
Can have a lifelong cocktail party story. It
Right.
might not be that great, unbelievable story that you just told, but there's a host of great stories where you ended up having the opportunity to buy a 7.5 cap of something that truly cash flowed. And oh yeah, the market came back a little, and that 7.5 cap is corporate guaranteed by 7-Eleven, right? The cap rate moved back up from 6 5/8, 6.5 to 7.25-ish. It's a pretty nice buy now, and it's got a 15-year corporate guarantee by 7-Eleven or one of the dollar stores or one of the pharmacy stores. I mean, things like that, that's real as we cycle through. You don't need gigantic changes, but a 10, 15, maybe 15-ish% change could mean a huge impact for your family's long-term, financial health. I mean, that's a huge number you're talking about. So again, I know today's the first day we really talked about this product together, but I know I'll be looking into it again for my own family.
Yeah, no, absolutely. Absolutely. It's phenomenal. And you guys can learn more about that by going to capitalgainstaxsolutions.com. We also have a mastermind group every Friday at 10 a.m. Pacific, 1 p.m. Eastern. You guys can sign up for it at the website, capitalgainstaxsolutions.com. And Joel, I'll definitely be sending you an invite. It's a weekly thing. Come ask questions. We got financial advisors and CPAs and real estate professionals and commercial brokers and everybody on there that come bring their stories and learn and ask questions. It's a great environment to be in and meet people. And it's a phenomenal working environment because the people are a lot smarter than I am. Let's put it that way. So
we all say that. And,
yeah. Well, but anyway,
so have to be networking up.
Yeah. So yeah, come check that out at Capital Gains Tax Solutions. That's capitalgainstaxsolutions.com. So Joel, I wanted to kind of ask you a couple more questions about your particular products and just the market. How has your has your business model changed at all with in the last 2 years with rates rising and just the extra liquidity in the market? I know we kind of touched on it earlier with the liquidity, but how is the new kind of landscape shaping out, changing what you guys are doing?
Well, for the last few years, COVID, obviously that 2 or 3 month, 90-day, let's say, where we all kind of shut down. But until then, rates have been declining. The markets were very, very strong. And then COVID happened in March of 2020. Everyone was obviously very nervous, myself included. I had no idea how the real estate market would react. Of course, the majority of us were wrong. Everyone was afraid.
Yeah.
And the froth was unbelievable. And at the same time, the government, right or wrong, I don't know, decided to really, really accelerate money supply and print. And that combination was just unbelievable euphoria for the real estate markets.
Yeah.
So everyone you could think of became a real estate investor. It drove and continues to drive prices even higher. And about 60 days ago, 45 days ago, things started to change for the first time in quite a long time, since 2010, 11. The interest rate market and most markets will always do what the least number of people think will do. And of course, rates were going to go up, but no one I've even seen take claim to it thought they'd go up in the manner with which they did. It's almost like a black swan event to see how fast, the 5 and 10-year treasuries have moved. Yeah. It's changed our markets considerably. Our interest rates are up 200 basis points for what we do.
Yep.
Combination of rising rates and the volatility in the markets has added to that increase. But I would tell you so far to date, we have not seen a slowdown in investor appetite. People are still out there. One of the things that's really happened and changed the dynamic in the real estate investment marketplace, besides mobile homes, are short-term rentals,
Yep.
Airbnb, commonly referred to a lot of times. And that market is on fire would be not even doing it justice.
Oh, no.
We,
Yeah.
we have an excellent product, a very simple product for that. We can give people a 30-year fixed rate. We can still get rates at 6% flat, fixed for 30 years. People love that. And it works really, really well. So that's been great for us. We were executing all over the country and constantly every day. I talked to a couple of people out of Colorado today, ironically, a couple of people out of Florida. Those states are really popular. Tennessee, Texas, that whole southeastern, the smile states, as I like to call them.
Yeah.
All those areas are just, it's incredible what's going on out there. So the market is huge. It's bigger than I ever thought. Every time we go to an event, we meet more and more people that own properties free and clear. They want to free up capital. One of the interesting parts of what I think is happening right now, we had a lot of high net worth clients staying on the sidelines. They didn't want to buy really expensive stuff.
Yeah.
They want to buy advantageously. So they're ironically willing and more comfortable paying higher interest rates when they can put the money to work at what they feel are advantageous situations. They didn't really want to just take money out at 4% to have it sit in their bank accounts, paying 4% and not putting it to work. They're
Right.
more comfortable paying 6, but buying something that they think is at an advantage and getting edged that way. So for them, that's a very interesting change in what's starting to happen right now. As a
Yeah.
deal might fall apart, somebody's debt service doesn't work anymore, they can't really afford the multi-payment, somebody else can step in a nice property and take that now.
Yeah, absolutely. And that kind of goes back to what you were saying initially, right? When you first kind of started, you were willing to pay, high rates, but it penciled, right? And so it
Absolutely.
didn't matter. And so and it's interesting. That's what the ultra wealthy are doing. They're waiting for the market to pencil better. So that's
We have spent a lot of time speaking publicly for a long time. And one of the things we've always tried to emphasize when we talk in front of real estate investors in particular, there's two things you can do. You can invest or you can spend money.
yeah,
If the markets change negatively and you've only been spending money, you're going to be found out quickly. Your
yep,
portfolio won't work. You'll be choking to death. And unfortunately, you're going to end up becoming one of the stories. We absolutely don't want that for anybody. And that's one of the reasons we try to point it out. The numbers really have to make sense for you as the investor. And to do that at a very large scale level is not an easy thing to do. I know it looks simple on HDTV. I know they make it look very simple, but it is not. At the height, I owned over 100 buildings, and it is work. If you don't think so, I can only tell you that's where the hair went. But
yep,
it is work. It can be great work, but you have to be, very honest with yourself. You have to be very focused. You have to stick to your model. You cannot get influenced out by the outside forces and have you finding yourself chasing deals. It won't work. You just
yep.
end up spending money, which benefits everyone else in the process, but not you long term.
Yeah, and there's that long-term mindset again, guys. So really pay attention to that. So Joel, where can people get a hold of you?
So the easiest thing to do, if you're a real estate investor, the acronym BRR is pretty well known.
Yep.
We are at B with 4Rs.com. And at BRR.com, you can find us. That's easy. Our phone numbers here are 732-851-6900. That's our office line. We're basically open, every day from almost 6 a.m. to 10 p.m. Eastern and on weekends as well. So we have a core group that, try our best every single day for clients, and we work hard at it. We really value those relationships. We're fortunate enough to have some people funding with us 15 years later. So hopefully
Yep.
we're doing something right. It's definitely an imperfect world. It's never perfect. It's not easy, but again, working with people, being honest with them, trying to be transparent all the time, and keeping them up to date on what's happening is crucial for their success and for our own.
Awesome. So guys, that's BRRRR.com. Go ahead and connect with Joel. You guys can, if you're interested in getting loan out there, they have some phenomenal products. can really help you take your game to the next level. So definitely go check that out. And Joel, we're kind of running out of time here, so I want to be respectful. But before we go, do you have any parting words?
I think personally, real estate and the investment in real estate is just a great long-term generational wealth builder. The tax laws surrounding it, I don't believe the government would ever have the audacity to ruin it. They're going to absolutely finish taking away all the deductibility of your residential home, no doubt about that. It's very popular, to be able to do that and rail against the rich on TV and, gain votes. But the economy would shut down in a minute if they take away depreciation, amortization, and interest expense. So I truly don't believe they'll do that. And investors, small ones like myself, to the largest, we can all take advantage of the same laws that the biggest ones help create for us and support and keep in place. I really do believe in real estate. It's been around since the time of the Bible. It's not going anywhere to the best of my knowledge so far. Technology has changed a lot of things, but sticks and bricks are still here. And until we can eat the pill that vaporizes us overnight, we're going to need a place to sleep. And I think that just presents a great opportunity for us all.
Absolutely. Well said, guys. And don't forget to go connect with Joel, BRRR.com. That's burr.com. And if you guys are interested in starting a deferred sales trust, or you want to learn more about that, come to capitalgainstaxsolutions.com. You can find out a ton of information on our YouTube channel as well. Go geek out, research on all the stuff. If you want to get in touch with me, I'm out in Newport Beach. If you have a primary home that you're looking to sell, Newport, Long Beach, Huntington, anywhere on the Southern California coast, and you have a super high capital gains tax, you can reach out to me at kingdomluxuryrealty.com or just get in touch with us at capitalgainstaxsolutions.com. And you can definitely find us there. Don't forget to come to our mastermind every Friday, 10 a.m. Pacific, 1 p.m. Eastern. Great place to come learn, meet people, and just ask your questions and get information. It's a phenomenal resource for you guys. So again, that's capitalgainstaxsolutions.com. Connect with Joel at burr.com. And thanks again, everybody, for listening to another episode of the Capital Gains Tax Solutions podcast. As always, we believe most high net worth individuals and those who help them struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven strategy such as the Deferred Sales Trust is the best way to exit highly appreciated assets so you can create, preserve, and grow your wealth. Guys, please rate, review, and subscribe. Thanks again for listening, and we'll see you on the next one. Have a good one.
Thank you.